Okay, so let's dive right in. On January 7th, 2026, the White House dropped an executive order that's set to completely shake up the defense industry. It's called Prioritizing the Warfighter in Defense Contracting, and believe me, it's one of the biggest policy shifts we've seen in decades. So, what does this new mandate really mean for the companies that are building our military's hardware? Let's break it down.
Right from the opening lines, this order pulls no punches. This quote, taken straight from the text, perfectly frames the central problem the White House is trying to solve. It's this perceived tug-of-war between what's good for investors and what's needed for our military.
So let's start with the premise, the why behind this policy earthquake. The administration is framing this as a pretty clear-cut battle, warfighters versus Wall Street. And the argument is that for far too long, that balance has been way off.
Think of it like a seesaw that's been stuck on one side. On one end, you've got shareholder returns. We're talking stock buybacks, dividends, all those short-term financial wins. But on the other end, you have what the warfighter actually needs: production capacity, real innovation, and, things being delivered on time. The whole point of this executive order is to force that seesaw back into balance.
And this isn't just some abstract idea. They're pointing to some pretty big numbers. Since 2020, the big defense contractors have apparently spent $110 billion on stock buybacks and dividends. That number is staggering, especially when you hear it actually outpaced what they spent on crucial things like building new factories.
So, that brings us to the mandate itself, which you could call the new rules of engagement for the entire defense industry. And this order doesn't just talk the talk, it sets up some really powerful new ways to enforce these rules. The language here is just absolute. Effective immediately. This is the core of it all. If a contractor is considered to be underperforming, the money tap for shareholders gets turned off, period. It creates a direct, unavoidable link between how a company performs operationally and its financial freedom.
So here's the million-dollar question. What exactly is underperformance? Well, the order leaves that pretty much up to the Secretary of War. It's a subjective call, based on things like, is production too slow? Are they putting commercial work ahead of government contracts? This gives the Department of War a ton of leverage.
And this new mindset is being baked right into all future contracts. Within 60 days, there will be new clauses that make the ban on buybacks and dividends official for any underperformers. They're also going after executive pay, tying bonuses to things like on-time delivery instead of just stock performance. The secretary even gets the power to cap base salaries. It's a total overhaul.
Okay, so how is this all going to be enforced? Well, the whole mechanism is built for speed. As soon as a contractor gets flagged, a very, very tight clock starts ticking. Just look at this timeline. It's aggressive, to say the least. By February 6th, the first list of underperforming contractors gets identified. Then look at that second line. A company has just 15 days, 15, to get a board-approved fix-it plan submitted. And at the same time, by March 8th, those new, stricter contract clauses are going into effect for everybody. So this is the news cycle, and it's incredibly high stakes. The secretary flags a problem, a formal notice goes out, and the company's board has just a little over 2 weeks to approve and submit a plan that's actually credible. There's basically zero room for error or delay. And what if that 15-day plan isn't good enough? Well, the consequences are pretty severe. The government can use the Defense Production Act to force companies to put their orders first. They can withhold payments, slap on negative reviews, or even just terminate contracts altogether. And here's the big one. They can stop helping companies with their foreign military sales. That's a huge blow.
Now, you might be thinking this is all about a few huge companies, right? Nope. The impact of this order is going to create a ripple effect that touches pretty much everyone in the defense world.
So who's in the line of fire? Of course, the prime contractors are the main target, but that pressure is absolutely going to flow downhill to all their subcontractors and suppliers. The way it's written, it could hit both public and private companies. Even investment funds are having to rethink the risks in their defense portfolios.
And this is such a critical point. You know how pressure rolls downhill? That's exactly what's going to happen. To protect themselves, the big primes are almost certainly going to pass this pressure down their supply chains. That means we're going to see stricter contracts, tougher enforcement, and way less flexibility for thousands of smaller companies. Now, for all its tough talk, the executive order leaves a lot of things kind of fuzzy. Key terms like major contractor aren't actually defined. And what are the specific numbers for insufficient production speed? This ambiguity is a real challenge for the industry, because it's hard to know exactly where the red lines are. So what does this all mean going forward? Well, the final takeaway here is really a call to action, because the message could not be clearer. Performance is now policy. Good intentions and fancy promises just aren't going to cut it anymore.
At the end of the day, this order is a fundamental shift in how the government thinks. They're moving away from just rewarding good financial numbers. Now, they are directly demanding operational results. Production, performance, and internal investment, that's the new currency in this town.
So given how fast and subjective this new world is, the biggest takeaway for any contractor has to be proactive self-assessment. You've got to be looking at your own performance, reviewing your investment plans, and taking a hard look at your pay structures to make sure they all line up with this new reality. Waiting for the government to call you out is not a strategy.
And just like that, with the stroke of a pen, the rules have changed. This isn't some proposal we're going to debate for a year. It's a binding directive, and it's already in effect. The era of, as the administration sees it, prioritizing shareholder returns over the warfighter is officially over.
So what's the bottom line in all this? In this new defense economy, being able to prove your performance in real time is everything. Being constantly audit-ready isn't just about compliance anymore. It's not about checking a box. It's about survival. It's become the ultimate competitive advantage.